What's up, ladies and gentlemen? How's it going? How's everybody doing today? Friday. Thank you for coming. Finally, it's Friday, huh? And the sun is peeking out. Sheesh. Finally. After a whole week of rain and clouds and thunder, even had a tornado about an hour south of me. Pretty bad one too, from what I hear. A lot of houses were taken out, cars flipped upside down. It was pretty brutal. How's everyone doing today? Good morning. So, we're going to take a look. We're going to take a look at the markets and see what was taking place, how things are ending up. Were they based on our expectations? Were we off? Were we on? Where things are lying? Okay, so we're going to do that and determine what is likely going to end up taking place for the rest of this week and what we should be prepared for going into next week. So appreciate you guys all being here. First of all, if we could hit the like button, that'd be a good way to start things off. Okay. So, okay, let's see. First thing I want to mention is we have a chart of the Euro-Japanese yen up right now. I was taking a look at this one yesterday, and I want to point out something that you should be aware of, because this is something that I've noticed a lot. Okay, so for instance, we have on the weekly chart this area of demand that we were talking about right here, and as you know, I drew in my horizontal lines, okay, attaching them from the top there and the bottom so that I can see where this weekly demand is located on other time frames. And so on the 4-hour chart, it is replicated like this. And for some reason, when you take a look at the 4-hour chart, you can see down here that there is actually price action that went below that line when the zone was created. Okay, you see that? All right. So on the weekly chart, that line is correctly drawn. But when you come to the other time frames, you can see that there was actually trading that took place down there. Okay, so in fact, that weekly area of demand was not removed. But if you're to just look at it like this, you can see that price traded below that line, which makes it traded through. So quite tricky. I don't like that, but that happens, and that's an issue with the data. Okay, 4-hour, it says that price was traded through over here. But if you look at the daily chart, look at that. The line is. Okay, it's perfectly on the bottom of that wick. So that's a strange thing that I've noticed. So you got to be careful with that, because I was looking at the 4-hour chart and I had seen that that area get taken out. But in fact, after I was checking out the lows of the candles, I noticed that it actually didn't get taken out. So we still have this weekly area of demand holding here on the Euro-Japanese yen. Okay, so I just wanted to point that out, as that is crucial to understand. Okay. Yeah, good morning, Allie. Nice to see you. I was going to send out emails this morning in regards to this live session, but I mean, you guys know we're doing this every morning unless I send out a message saying that it's canceled. So for those in the know, you know that you should be here. Other than that, you'll figure it out. You'll figure it out. All right, so let's take a look at gold. So we saw a lot of strength in gold, which is good. We were expecting that. And let's just close off things here that we don't. Okay, so we made a nice move to the upside in gold, which is what we were expecting. 4-hour area of demand was created. Price came down into it, used that 4-hour area of demand, and rallied. Then they created another area of 4-hour demand, and price came down and is rallying once more. So let's see 15-minute chart. What's going on here? So it's rallying off of that. So I'd be watching for price to do something like this. Rally up. That's what I'd be watching for. Okay, so potential long trade on gold chart. Okay, 4-hour. All right, with 4-hour demand in play, there's room for price to get up here like that. And let's see, where is that daily located? Is it inside? Just about inside. 1869, 1869, 95, 1869, 18. Oh, that's just outside actually. Okay. Map out this area of supply. Okay, gonna draw a horizontal line. And then there we are. Gonna share it, apply it across. That way when I open up my 4-hour chart, change it to see it on the 4-hour. Go into visibility and hours, and then do the top one as well. Settings, hours, there you go. Okay, so there you go. So there's the weekly area of supply here on gold. Okay, so we have a 4-hour area of demand. You could get that move up like that very easily. Okay, it's on the journey, and this should be changed. Let me see. We got an uptrend here. 4 hours. So that 4-hour uptrend can easily facilitate a move up. Okay, so that's what I'm seeing there. So entry, you could take it off the 15-minute chart just like I was pointing out. How many likes we got? 13 or so. We got 20 of you. We should at least have the same amount of people that are watching as likes. If you could hit the like button, guys, that'd be appreciated. Don't forget that like and hit the subscribe button if you haven't subscribed yet. All right. I'm doing this all for you. All this analysis, all for you. Appreciate the like. Let's adjust this trend line here, just like that. Okay. So that's what we got with gold, and nothing to suspect that anything is going to play out differently. So we'll continue on that path. Oil, so how did oil end up playing out for the week? Let's see. We got the drop in price, which we were talking about after the big rally. And retail traders were shorting the heck out of this. Wrong time. So we did the video about that on YouTube. If you guys haven't seen that, you should. Let me point it out. It's a good video I did that breaks down how the banks lured everybody in. Where is it? Channel. Videos. Let me see, where are you? Right here. This one's a good one. Bankers exclusive oil report. Bankers exposed. You guys should check that out. If you haven't seen it, it outlines exactly how the banks lured retail traders, okay, into taking losing positions. So, great video. And if you haven't seen the other one's really good too. Right up here. US dollar report. How the banks used NFP to sucker in traders. Okay, you should watch that one as well. Okay, so oil, retail traders were suckered into getting short at the wrong time. So let's see, we had this area of supply removed here on the monthly chart. And right now, let's see what they're doing. Look at that. So they end up getting out of their shorts for losses because this was majorly short up until here. Okay, it was really short. So they were forced to get out of a bunch of those short positions at a loss. And now they're getting in long. Okay, now they're getting in long. But as I mentioned before, now's not the time to be getting in long either. Because what we're seeing on the charts is an indication that price is going to drop. Okay, the only thing keeping price up right now is that ascending trend line. And that is not a high quality trend. Okay? From our analysis, that is not a high quality trend. I would not be excited to get into long positions based on that trend. So that can easily break and price can easily drop. All right? So as retail traders were getting out of their short positions at the highs after it rallied up against them significantly, that's when they got out. Okay? So after it drops, they're going to be like, oops, I should have held that short position longer. Yes, because they make the same mistake over and over again. But they're getting in long now, and then it's going to drop even further and drop even further. And then after the banks shake them out to the downside, then they will reverse price and head and push price upwards. Okay? So again, this is not 100% given that this drop is going to take place because we can't really say that at this point. And I've told you